Investors are digesting lots of earnings reports in both Canada and the U.S. this morning. Among them, Lyft shares are in focus, and so are shares of CVS, the pharmacy healthcare company. Let's run it through with John Zechner. He's chairman and founder of Zechner Associates. Okay, let's start with Lyft. I know you are adding to your position in Uber on behalf of clients. What do you think of the Lyft results that you've seen?
They were a disappointment. Sure, the bookings are down, and clearly they're losing a bit of market share to Uber as well. So, Lyft has really been the bigger disappointment. I think they traded over $80 on that after the initial IPO a couple of years back, and it's traded all the way down, to the 10 level. Uber, is trading well above what they IPO'd at, I think ride sharing is obviously in our future, and I think autonomous driving, in terms of robotaxis, another thing will be huge as well. I think Uber has a better first step there as well. Their agreement with Waymo is huge, because when you look at full self-driving, and people get excited about Tesla for full self-driving and everything, when you look at it, who's has the most miles of full self-driving right now is Waymo, my Alphabet, and Uber has an agreement with them now where I think on the app you're going to be able to choose, it's Uber X, whatever. One of the options will be in a few cities where they're trying it will be a Waymo vehicle, full self-driving. So autonomous driving is coming ahead. So they're losing that battle, little Lyft is. So I think, in the end, it's an area that's growing. But that was, they are clearly the second player, and Uber is, what I like about Uber, another reason we own it, I love it when a company, they brand so well that they become a verb. It's like, I'm, Google. It's like, I'm going to Google this, Google that. I'm going to, I don't go to a ride share. I'm going to Uber over here. So.
You think Uber is attractively priced right now? It's had quite a rally very, very recently, as that graph shows. So a lot of investors saw value at $64 or so.
Yeah, and it's popped a little bit, but you're getting more players into it. I think, what's his name the other day, a big hedge fund player in the U.S. sort of announced a position in it as well. You're about 20 times operating cash flow, not bad for a high-growth company, and they're sort of at that place now where they're starting to accelerate their profitabilities, and so that's a positive. And like I say, when I look at how the way Tesla is valued, and everyone says it's not on the autos, it's on full self-driving, I thought, well, let's go to someone who's actually in that business and putting some miles down.
Okay, let's move on to CVS Health. This is a company and really a sector of the U.S. that has had big challenges, but the market likes what CVS has reported. The shares were up about 15%, at least in pre-market trading.
Yeah, and this is, I've talked about this not that long ago when, buying these beaten-up, value-oriented companies, like it doesn't always work, but sometimes, CVS we've talked about recently because I like it. It's had an awful year because of the pharmacy benefits business, obviously the insurance business, the healthcare management business, as well as the drugstores, and the stocks just continue to, drop and drop. But, the easiest thing to fix on a company is to get rid of money-losing businesses. And when you look at CVS, if you sort of X out the businesses where they're losing money right now, you're probably looking at about $8 a share. So, I think they gave the guidance this year as about, they're in the $5.75 to $6 range. So, it got down to $45, so exceptionally cheap. Everybody is so negative on the healthcare stocks right now, just believing, what the regulation and RFK and all of that's going to change. I'm like, no, I think this is, sometimes you can buy these things as opportunities. You got to stick them out for a little while, and it's hard to always hit the bottom on this, but this one just stuck out as great value, and you're getting a little reward for it today.
Okay. Why have you pared back exposure to Celestica?
It's just, I guess, it's not that the valuation's excessive compared to the rest of technology. It's certainly very excessive relative to the history of Celestica. And I've been looking at this, company since it, spun out of IBM in the early 1990s. And it's always been a low-margin business with very little organic growth. It was mostly acquisition, and capacity was always an issue, which kept margins down as well. That is changing, looking more at the growth companies right now until the data center spending starts to slow down. And there's no early indication that it's going to, but it's going to decelerate. And I think everybody talked about how, Amazon upped their spending for the next year. Alphabet has upped it. Meta is up. They've all, but that Microsoft, one of the biggest spenders, they came out and, they really talked about this is like the peak year. And starting in June of this year, their next fiscal year, they don't see it accelerate or growing much from there. I think you're hitting the peak of this growth curve, Paul. And I think as you do, these stocks, they always peak before the growth peak. So I'd just be a little reticent to get too heavily invested in companies whose primary growth is tied only to data centers, and Celestica has been one of the biggest winners. And yeah, we owned it, and we were late jumping into this. We bought, I think, last year finally, and I paid 40 after watching it go from 10 to 40, and then we sat there and watched it go to 150, and then sold it, and started selling. We sold it, the last little bit I've been selling it, and then I think it's moved, then it had that huge drop when the DeepSeek thing, and then it recovered it right back. But yeah, I just think it's not, it's not an organic growth story for a long period of time. It's specific to what's going on with the data centers.
John, always great to talk to you. Thanks a lot.
Thanks, Paul.
John Zechner is chairman and founder at J